Your portfolio just dropped 30%. Your stomach sinks every time you open your investing app. Red everywhere. Friends are panic selling. The media is screaming collapse, and you wonder if it's time to give up. But here's what no one tells you. These moments of chaos, this is where real wealth is made. Today, I'm breaking down the truth about market crashes. Why they happen, why they're normal, and most importantly, the three-step strategy that turns crashes into cash machines. I'll show you the biggest mistakes that cost people fortunes during crashes, reveal the exact method successful investors use to profit when markets tank, and give you a simple action plan you can use starting today. If you want to stop losing money during crashes and start making it instead, smash that like button. It helps me reach more people who need to hear this. And stick around until the end because I've got some bonus crash-proofing strategies that even experienced investors don't know about. Before we dive into how to profit from crashes, let me tell you about the most expensive mistake in investing history. It's not picking the wrong stock or buying at the wrong time. It's something much simpler and much more devastating. The mistake is emotional investing. When markets crash, your brain switches into survival mode. The same instincts that kept our ancestors alive when they faced hungry lions now kick in when they see red numbers on a screen. This is why people sell at the bottom of crashes, even when they know they shouldn't. It's not stupidity, it's biology. Your emotional brain overpowers your logical brain every single time. But here's the thing. Successful investors have learned to flip this script. Instead of fighting these emotions, they use them as signals. When they feel scared, they know it's time to buy. When they feel greedy and confident, they know it's time to be careful. They've learned to be logical when everyone else is emotional. The 3 pillars of crash-proof investing. Now let's get into the meat of how you actually make money during crashes. It comes down to 3 simple pillars that separate the winners from the losers. Pillar 1. The shopping list strategy. Smart investors don't wait for crashes to decide what to buy. They prepare their shopping list ahead of time. Just like you wouldn't go grocery shopping without knowing what you need, you shouldn't approach a market crash without knowing which stocks you want to own. Here's how it works. During good times, you research and identify great companies that you'd love to own, but they're too expensive. Maybe it's Microsoft, Amazon, or that solid dividend stock you've been watching. You write down the price you'd be willing to pay for each one. Then, when the crash hits and panic selling begins, you don't have to think. You just shop. If Microsoft drops to your target price, you buy. If Amazon hits your number, you grab it. No emotions, no second guessing, just execution. This strategy works because crashes make everything temporarily cheap. It's like having a coupon that works on everything in the store, but only for a limited time. Pillar 2. The patience principle. This one's harder than it sounds because our culture rewards speed and instant gratification. But crashes reward patience more than anything else. When you buy during a crash, don't expect to get rich next week or even next month. The companies you buy might keep dropping for a while. The news might get worse before it gets better. Other people might call you crazy for buying when everyone else is selling. But remember, you're not buying for next week. You're buying for next decade. Great companies always recover from crashes, usually stronger than before. They use the tough times to cut costs, improve operations, and grab market share from weaker competitors. The patience principle means you're comfortable being wrong in the short term to be right in the long term. It means you can watch your investments stay red for months, knowing they'll eventually turn green. Pillar 3. The dollar cost averaging defense. Here's a strategy that takes all the guesswork out of crash investing. Instead of trying to time the perfect bottom of a crash, you spread your buying over time. Let's say you have $10,000 to invest during a crash. Instead of putting it all in at once, you might invest $2,000 every month for 5 months. This way, if the market keeps dropping, you get to buy more shares at even lower prices. If it recovers quickly, you still captured most of the upside. This method removes the pressure of perfect timing. You don't need to be right about exactly when the market hits bottom. You just need to be right that good companies will eventually recover. and history shows they always do. The Crash Survivor's Playbook. Now that you understand the basic pillars of how to cash from crashes, let's get practical. When the next crash hits, and it will hit, here's your exact game plan. Step 1. Do nothing for 24 hours. When you first see your portfolio crashing, your emotions will be screaming at you to do something. Don't. Close the app, take a walk, watch a movie. Give yourself 24 hours to let the initial shock wear off. Step 2. Assess your situation. After you've calmed down, look at what you own. Are these companies you researched and believed in? Or are they random stocks you bought on impulse? The good companies will likely recover. The questionable ones might not. Step 3. Activate your shopping list. Remember that list of companies you wanted to own? Now's the time to check if any hit your target prices. If they did, start buying, but gradually, not all at once. Step 4. Stick to your plan. This is where most people fail. They start strong but panic when the crash continues or when recovery takes longer than expected. Trust your research, trust the process, and remember that every successful investor has been through multiple crashes. The key is having a plan before emotions take over. When fear and panic are everywhere, you want to be the calm, prepared investor who sees opportunity where others see disaster. And now, as promised, here are some advanced strategies that even experienced investors often overlook. These are the secret weapons that can turn any crash into your biggest wealth-building opportunity. Bonus tip number 1. The Crash Cash Cushion. Most people keep emergency funds for life emergencies, job loss, medical bills, and car repairs. But smart investors also keep what I call a crash cash cushion. This is money specifically set aside to invest during market crashes. Here's how it works. During good market times, instead of putting every penny into stocks, you set aside 10 to 20% of your investment money in cash or safe investments. It might feel like you're missing out on gains, but this cash becomes incredibly powerful during crashes. When everyone else is forced to sell because they're over-leveraged or need money, you're the one with cash ready to buy. It's like being the only person with money at a garage sale. You get the best deals because you're one of the few buyers. Bonus tip number 2. The Dividend Safety Net. During crashes, companies that pay reliable dividends become extra valuable. Even if their stock prices drop, they often keep paying dividends, giving you income while you wait for prices to recover. Look for companies with long histories of paying and increasing dividends, even during tough times. These dividend payments can help you stay patient during long recoveries because you're getting paid to wait. Plus, you can use those dividend payments to buy even more shares at crash prices, accelerating your wealth building through what's called dividend reinvestment. The stock market has survived world wars, pandemics, economic depressions, and every crisis you can imagine. It has not just survived, it thrived. The next time you see red numbers flashing on your screen and hear talk of market crashes, don't panic. Take a deep breath and remember what you learned today. Crashes aren't disasters. They're opportunities disguised as disasters. If this video helped you see crashes in a new light, hit that like button and let me know in the comments what your biggest takeaway was. Are you feeling more confident about facing the next market crash? Don't forget to subscribe and ring that notification bell because I'll be here to guide you through every market condition, the good times, the bad times, and everything in between. Remember, simplify money, Muchafy wealth, one smart decision at a time.